Hello friends. Friends, we will continue with share capital. Right? And in the last lecture, we started with a very important topic, that is oversubscription of shares. Right? And in that, I told you what it means, that oversubscription of shares, a company issued 50,000 shares of rupees 10 each. Right? Company issued 50,000 shares of 10 each. That is, company said that we want to raise 5 lakh rupees. For that we are issuing 50,000. Now they ask public to send the applications along with application money. The company received applications for 70,000 shares. Right? The company has only 50,000 shares. The company has issued only 50,000 shares, but they received applications for 70,000 shares of rupees 10 each. Now, with the 70,000 shares, they have received application money also. With the applications, they have received application money also. What to do with the excess application money? Because what is the amount required? 5 lakh. What you have received? 7 lakh. Now what to do with that excess 2 lakh? I told you there are 3 methods. The first method that we discussed in the last lecture was reject excess applications, right, and refund excess money. That is, refund the excess money of 2 lakh rupees. Clear? So this was one method where we reject excess applications. That means we reject 20,000 applications, 20,000 share applications, and whatever the application money we have received on those excess 20,000, that money is refunded to the people. Clear? Oversubscription is clear. Method 1 is clear. This is what we discussed in the last lecture. Now in this lecture we are moving on to a very important part, that is method 2 of dealing with oversubscription. That is partial or pro rata allotment. Right? Partial or pro rata allotment. Clear? Now, what it means? You issued 50,000 shares. Right? You received applications along with application money on 70,000 shares. This is oversubscription. You issued 50,000 shares, you received applications along with application money for 70,000 shares. Right? Now, how much are the excess shares issued? 20,000. This is excess. Excess applications received 20,000 shares. Now in the first method we say reject these applications on 20,000 shares, right, and refund the money. In the method 2 they say do not reject the 20,000 shares. What you do is you allot some shares to everyone. Do partial allotment. How that partial allotment is done? They say you received applications for 70,000. To all these 70,000 applications, allot 50,000 proportionately. right? To all the 70,000 applications that we have received, allot this 50,000 shares proportionately, and in which proportion they will be issued? In the ratio of 5:7. How pro rata allotment is done? In this case, I will say for every 7 shares, a person will get 5 shares, right? So this is how you do pro rata allotment. For every 7 shares, a person will get 5 shares. Clear? That means we are not rejecting the applications. What we are doing is we are just allotting the shares proportionately. We are dividing the shares into more parts so that every person who has applied for the shares gets some shares. If he has applied for 10,000 shares, he might not get 10,000 shares, but he will get some share. This is pro rata allotment, that is partial allotment. If you applied for, see, if a person applies for, say, 10,000 shares, then how many shares he will get? That is the question. That is pro rata allotment. He will not get all the 10,000 shares. He will get partial allotment. Understand the word pro rata. The other word is he will get partial allotment. Clear? How this partial allotment is done? He applied for 7 shares. He got only 5 shares. Because we have to give some share to every person. We are not rejecting the applications. Right? For every 7 shares, we are giving 5 shares. And if you have applied for 10,000 shares, you can easily find out 5 divided by 7 into 1,000. So how many shares he will get is this figure. 5 divided by 7 multiplied by 10,000. Right? Whatever figure you will get here, that is the number of shares he will actually get. He applied for 10,000, but because there was oversubscription on shares, he got some less number, but at least his application was not rejected. Right? He got partial allotment of shares. Clear? Now the question is, we are not rejecting the applications, we are allotting people some shares. Now, what is the issue in this? The main issue is we received application money. We received application money on 70,000 shares. Isn't it? We received applications for 70,000 shares. We received application money on 70,000 shares. Right? 7 lakh, say. Right? Then, what was the application money actually due? Application money on 50,000 shares. That is 5 lakh. What is the excess application money received? 2 lakhs. This is excess application money. In the first case, what we did was we outrightly rejected the applications, right? And whatever money was received on those rejected applications, we refunded that money. Now in this case, we have not outrightly rejected the applications. We have accepted all the applications. We have done partial allotment to all the applicants, but we have received excess application money. Now what to do with this excess application money? In case of pro rata, what we do is, if it is a case of lump sum, like I have taken this, that whole money is called at the time of application, what you will do is you will refund money. This is one alternative. This is in case of lump sum. Now let's take a case of installments. I'll explain you with the help of an example. Right? Company issued 20,000 shares of rupees 10 each, payable as, you can write down this example, payable as on application rupees 4, on allotment rupees 3, and on first and final call rupees 3. Then applications were received for 25,000 shares. Now, how to deal with this problem? You issued 20,000 shares, you received applications for 25,000 shares. This much is clear. Along with the applications, you received the application money. How much is payable at the time of application? Rupees 4. Let's do the solution. Shares issued. How much are the shares issued? 20,000. Applications received 25,000. Excess applications are 5,000. Clear? Now on these excess applications, you must have received the application money also, that is rupees 4. Rupees 4. Application money on excess applications. This is excess application at the rate of rupees 4. This comes to 5,000 multiplied by 4. That means 20,000 rupees you have received extra. Clear? You issued shares 20,000. On 20,000 shares, you were to receive 60,000 as the application money. But how much you received? 25,000 shares. On 25,000 shares, you received, how much you received? 25,000 multiplied by 4. 80,000 was to be received as application money, but you received 1 lakh rupees. That means, what is the excess application money that you have received? 20,000 rupees. Take it other way. I'll explain you in two ways, right? This is one way, that find out the excess applications, and on those excess applications you must have received the application money at the rate of rupees 4. So you can find out what is the excess application money that you have received. Other way is application money to be received. What was the application money to be received? 20,000 issued shares multiplied by 4. This comes to 80,000. And application money actually received. What is the application money actually received? Is you received applications for 25,000 shares. On that, at the rate of rupees 4, you received application money. So what is the excess application? Excess application money received. This comes to 1 lakh. Actually received minus that should have been received. This is the excess application money that you have received. So I have explained you in two ways. Applications received minus the shares issued, whatever the excess applications you have received, on that excess applications You have received application money at the rate of rupees 4. That is the excess application money that you have received. Clear? Now the question is, in this case, you will do pro rata allotment. Right? Pro rata allotment is done. That means no application is rejected. The people who applied for 25,000 shares, they received 20,000 shares on the basis of partial allotment. That every person who has applied for shares, he got the shares, but not what he has applied for. He got lesser number of shares, but he got the shares. We are not rejecting the applications. The people who applied for 25,000 shares, they received 20,000 shares in all on pro rata basis. Now, what is to be done with this 20,000? That is the excess application money received. In this case, what we do is, in case of pro rata allotment, what we do, this excess application money will be adjusted towards further payments. This excess application money received will be adjusted toward further payments, and if after this excess money is still left, if after this excess money is still left, that will be refunded. Right? How we adjust that? Let's see. Now I'm going to pass the journal entries. Right? I will explain you through journal entries. Clear? Now, what is the first journal entry? You received applications along with the application money. How much applications you have received and how much application money you have received is the question. Right? That is, first entry is bank account debit to share application account. How much it is? You received applications for 25,000 shares, and on that you have received at the rate of rupees 4. You have received application money to the extent of 1 lakh rupees. Clear? Now, at the time of allotment, what you do? What is the journal entry? Share application account debit to share capital. Share application is 1 lakh. How much you will transfer to share capital? Can you consider this 1 lakh as your capital? No, because you have issued capital of only 20,000. You cannot consider it more than what you have issued at the rate of rupees 4. So you can transfer only 80,000 rupees to the share capital account. That is the money which we are going to use for the business. We are not going to use 1 lakh rupees. We can only use 80,000 because subscribed capital cannot be more than issued capital. Remember? Right? So we can only use 80,000 in the business. That's why we will transfer only 80,000 to the share capital account. Now what to do with the remaining 20,000? This remaining 20,000 is your excess application money received. What I have written is that excess application money received will be adjusted towards further payments. What is the next payment after the application money? At the time of allotment, what you will do? You will call allotment money, because the question says at allotment you have to pay 3 rupees. what is the journal entry for this? Share allotment. We first make the amount due, share allotment, account debit to share capital account. On 20,000 shares at the rate of ₹3. Because you can call money only on 20,000 shares. That is the issued capital, and only 20,000 shares you can allot, and 20,000 you are allotting to the applicants who applied for 25,000 shares. What you are allotting is 20,000 shares. So you can call the allotment money on 20,000 only. So what is the allotment money? 60,000. Now what do you say that I received excess application money to the extent of 20,000. Now I have to receive 60,000 from you. What I do is I adjust the excess application money received towards allotment. How I do this? I'll say to share allotment account. How much? 20,000. You have to receive 60,000 rupees on allotment. You are to receive 60,000 rupees on allotment. What do you say? That I will consider that I have already received 20,000 rupees of allotment. Because I have received excess application money, that excess application money I will adjust towards allotment. That means whatever the amount I have to receive on allotment, I will reduce that amount by the excess amount that I have already received. I am adjusting that amount towards allotment. Is this clear, friends? You have excess money with you. You have excess money of the people who applied for the shares. You have excess money with you to the extent of 20,000. Now you have to receive 60,000 from them. You already have received 20,000 in advance. Consider that you have already received 20,000 of allotment money in advance. So what is the allotment money left? So how much allotment money you will receive more? 60,000 is the due allotment money. You consider that the excess application money, you transfer it to allotment account. That we have received 20,000 on allotment. We were to receive 60,000. We have already received 20,000 at the time of applications. Now what is the remaining amount that you will receive? 40,000. So what will be the journal entry? Bank account debit to share allotment account, that is 40,000. Clear? You credited share allotment account with the 20,000 here, 40,000 here, and you debited 60,000 here. The net effect is absolutely fine. You debited an account with 60,000 and you credited the account with 20,000 here and 40,000 here. That means your journal entry is correct. Clear? So now you understand how we do pro rata allotment, that is partial allotment. We do not reject any shares. We do not reject any shares. What we do is we do the partial allotment. If a person has applied for 10,000 shares, then we will do partial allotment. That is, we might give him 6,000 shares, 7,000 shares. He will not get what he has applied, but he will get some shares. We are not rejecting the application, right? What is important to understand here is how to adjust the excess application money received. First, you should know how to calculate the excess application money received, right? This is how you calculate. Calculate what are the excess applications that you have received, and obviously on those excess applications you must have received the excess application money. Calculate that. Clear? Then after that calculation, you must know what to do with this excess application money. this excess application money will be adjusted towards further payments. That is, when you have to call allotment money at the time of allotment, what you will say is, we already have your 20,000 rupees, just give us the remaining balance. Here 60,000 was due on allotment. We told the shareholders that we have 20,000, we have your excess 20,000 with us. Do not give us 60,000, give us 40,000. We will consider the remaining 20,000 as we have received at the time of allotment. Clear? Because to the share capital account we cannot transfer more than what we have issued. We issued only 20,000 shares, and subscribed shares cannot be more than the issued shares. Clear? So this is how we are going to adjust the excess application money received. See, this will be given in question whether you have to adjust it towards the allotment only, or you have to adjust it against the further calls also. If it is given that it is against the allotment only, then whatever is the excess amount still remaining, that you will refund. Take an example. I'll take a very simple example. What I mean to say is, you have excess application money of say 80,000 rupees, right? Amount due on allotment is 60,000 rupees. Now what you will do? Amount adjusted from excess application money. How much amount you will adjust? You have 80,000 rupees already in your pocket. Now amount due in allotment is 60,000. You say, I have already received your money, do not pay me anything. I have your excess money, do not pay me anything. This is 60,000. Now out of this 80,000, you adjust 60,000 on allotment money. What to do with the refund? Balance excess application money. This is 80,000 minus 60,000. Now what to do with this remaining 20,000 rupees? This depends on what is given in your question. If the question says that you have to adjust the excess money only on allotment, then you will refund this money. If the question says that excess application will be adjusted towards the further calls, then you can adjust towards further calls. Clear? So this will depend upon the language of the question, that either the money will be refunded or the money will be adjusted towards further calls. Clear? Now, is this clear, friends? I have tried my best to clear you the concept of pro rata allotment, that is partial allotment, that we do not reject applications, we allot shares to all the people on partial basis. If someone has applied for 10,000 shares, we are not going to give him 10,000 shares, we give him 6,000, 7,000 shares on the basis of pro rata allotment. Then excess application money received on excess applications, that will be adjusted towards the further calls. Either it can be refunded or it can be adjusted, that your question will say. Right? One thing here to remember is, first thing is we are not rejecting applications. Right? Second thing is we are allotting shares to all the people who have applied on partial basis or pro rata basis. Clear? Third thing is excess application money that is received on excess applications, that will either be refunded or that will either be adjusted towards further calls. Right? That is, allotment, first call, final call, that will again depend upon the question. If it says it is to be adjusted only towards allotment, then the balance money will be refunded. Clear? Balance money will be refunded. In most of the cases, it will be given that it has to be adjusted against allotment only. Then excess money will be refunded. Clear? I hope this example is clear. Here, at the time of allotment, you were to receive 60,000. You tell people that we have excess money of 20,000. So, adjust this excess money with 60,000 and pay us only 40,000 as allotment money. We have already considered that we have received allotment money to the extent of 20,000. Clear, friends? Right? So, if you have any queries, just send me an email at ksjteaching@gmail.com. Right? Now, in the next lecture, what we are going to do is method 3. What is method 3? It is very interesting, little bit technical, very easy. Right? We will do it in detail. That is a combination of method 1 and 2. Clear? This method 3 is a combination of method 1 and method 2. This is what we are going to do in the next lecture. Right? So that's all for this lecture, friends. Thank you so much.